Here's an exam revision lesson on cash flow analysis this time. This is the scenario all about Jasmina Singh running the gardening company JSG Limited. I'll leave that on there for you. If you want to read it, pause the video or the PowerPoint and then you can take in the detail. Here's the 4-mark question for you. Jasmina has forecast that the enterprise would have a negative closing balance in each month. Explain 2 solutions that would improve the negative closing balances that Jasmina has forecast for her enterprise. Over on the right, you can see this is her cash flow. She's got a cash flow for March, April and May. You've got the inflows, the outflows, you've got net cash flow, and down the bottom you've got opening and closing balance. So this cash flow is all complete. So you need to look at the cash flow and investigate what's going on with the closing balance and give advice to Jasmina. We're on a finance question, so we don't want the rainbow buckets for extended questions. We have instead the finance fire ladder to success, and here are the 4 steps to remind you your approach to this question. The first step to success on a finance question is to not panic. The next step is to highlight or mark out the areas you need to work out. So it's literally so you can see things on the finance question so you know what you're doing. The third step is to try and work out what's going on from the numbers they've given you. Basically have a go at reading it, because some of it could be basics, things like adding and subtracting on there, so you need to have a look. The 4th step is to complete what's left using formula if needed. Sometimes it might not be needed, but I can't deny that there is formula in the exam, so that could be the final step. So let's not just talk the talk, let's actually go through and demonstrate how these steps to success on a finance question are going to work. Right, let's look at this cash flow forecast. Let's actually follow the finance fire ladder of success. Let's follow the steps. The first step is obviously, hopefully we've reached don't panic. Now we're going to look at the cash flow and work out what we do understand. The second step we need to look at is to highlight or mark the areas you need to work out. Well, you don't need to input anything onto the cash flow. You do need to work stuff out. It's a cash flow. So for the 3 things you always deal with the cash flow are inflows, outflows and net cash flow. So let's just circle those. Hang on a sec. I think we need to go back to the question right now and just have a double check of what the question's asking us to do. Explain 2 solutions that would improve the negative cash closing balance, the negative closing balance that Jasmina has forecast for our enterprise. Let's follow what the question says then and have a look at the closing balance. As you can see, each month, March, April and May have a negative balance. So let's look upwards in columns. Let's look at March first and see the first negative balance, and that is in the net cash flow of 14,550. That's the first one. Clearly something's gone wrong for March. Let's go upwards. Let's look at net cash flow, and we can see that 17,250, that's quite big. As we're dealing with cash flow, we're going to go to inflow next. We've done cash flow, net cash flow, outflow, and now we're looking at total inflow, and we can now see that's 2,700. So we've got quite a substantially small inflow compared to this expenditure in March, just over 17,000. Sticking with March then, let's look down the line and look at what Jasmina spent a load of money on in March, and then we can find that she spent £12,000 on new equipment. Right, we can see that £12,000 was a substantial purchase in March, which she clearly didn't have the income to pay for. So let's see if there's anything else going in April and May that's gone on as well. Well, if we look at April and May and we look at the inflows, the income that she's got, then we can see that she's done reasonably well in April, done very well in May, nearly 6,500 in April and 10,000 in May. We look at the outflows, 7,740 and 8,000 odd in May. No, that she's actually done reasonably well in April and May. So the culprit clearly is the new equipment. She's bought stuff that she couldn't afford, so we need to now think about what can companies do when they need something for their work that they can't afford. You've now reached step 3 of the finance fire ladder of success. So you've been through the ladder and you've analysed what's on the cash flow. You've seen the problem. She wants that equipment, but she can't afford it. So what can she do? So obviously she can't change the price of the item. So she needs to look at that £12,000 compared to the 2,700 income she's got in March. Well, the first thing she could think of is perhaps spreading out her payments so that she can pay monthly, and she can do that perhaps if she gets a trade credit. Now remember, trade credits we covered in the sources of finance lesson, so there's one that we could look at. She can look at delaying payments to suppliers so that helps spread the cost, because the stock is also a little bit of a pricey outgoing she's got, particularly in April and May, which adds to the problem. Haven't mentioned that before, but let's not ignore it. Well, the one we really got to look at is we've got these big expenditures coming up. Has she actually got the income for it? So what could she do in order to increase her income? Well, that's if we think about what learning aim A, which is about promotions, so she could possibly do a bit of advertising to increase her sales. Another area that she could look at is if she owns some property and some land, she could look to sell some to generate her own income, because these are called assets, and assets are there for a reason. You might need to use them. And then another choice is going back to the source of finance. She could look to get an overdraft or a credit card. So some tips from those lessons and which lessons to look at are going to come up in a minute. And those are some points that you need to include for your answer. Here's the tips for the lessons. It's the piggy lessons. So that is the, first of all, these are which lessons to go to, and I've helped you out. I've done a little nod of which bits to go and have a look at. Now remember what the question's asking you. It's asking you to explain 2 solutions that would improve the negative closing balance. 2 solutions, that's 2 things you've got to discuss, and if you look at the points, it's 4 points. So you need to identify the solution, and then you need to give the reason why that solution would improve the negative closing balance. So it's all very well saying spread the cost, but you've got to explain how that helps. It's already well coming up with get a credit card, but you've got to explain. You can't just make a statement, you've got to add to that explanation. Okay, so that should help with what you need to do for your answer. And here's the question again, just so you've got a clean sheet of paper. You've got the question and the scenario. So that's saying explain 2 solutions. Don't forget what explain means, that you need to make a statement and you need to give some reasons behind why your statement is a possible solution. And there's a clean copy of the cash flow forecast, so you can look at it without any of my scribbles all over it. Good luck, and remember this is 4 points. So see you later, well done, and don't forget to submit your answer.